Hi there, traders. This is Brad Gilbert with FX Market Insight for Friday, the 16th of April. All right, a pretty interesting session just through this last, well, particularly the North America session. I was going to say the last 24 hours, but we've been in a bit of a state of flux, right? You've got the Treasury yields, okay, whether you're looking at the yield curve itself or the Treasury prices. Now that has been a fair bit of had a fair bit of control over where the dollar's been going. Now we're starting to see that significant connection dissipate. The yields have actually dropped quite a bit, okay, especially the long dated yields, the 10, 20, 30-year bonds. Now that would usually, right, give us a weaker dollar, right? But what we've seen is, and it's been one of those interesting weeks where the retail sales figures were so massively strong that the weakness in the treasury or the lower yields, which is a weaker dollar, has been offset by the stronger US data. Now, this is like really, really interesting. The other key thing out of the previous session just gone is manufacturing sales out of Canada, exceptionally weak numbers, right? That's a sell CAD situation. You've got a buy dollar situation here with the strong dollar. Sell CAD. So dollar CAD has bounced as well. Right. It's easy to sort of see what's happening after the fact. Now, when it came down to the retail sales figures, I was sort of saying yesterday, it wasn't too dissimilar to Tuesday's US CPI data. I'm not exactly sure what strong or weak numbers does for the dollar, but now we're starting to see a definitive break from the relationship between the macro data and the treasury yields. Okay, so it doesn't mean the treasury yields have gone away as an influence on the value of the dollar, but right now we are starting to see US macro data starting to dominate or really come back into play, right? So the equity markets, North American equity markets, pretty good day overall, right? That sort of day there, you would expect the dollar block, right? The pairs Euro, Sterling, Aussie, Kiwi to rally and the dollar to fall. But you know what? We didn't see any of that, right? And this is where your understanding and knowledge of the markets, really strong data, offsetting the lower yields. What does that give us? Well, I tell you what, it gives us a really sideways market where they are completely confused into where the dollar goes from here. And when I'm talking about the dollar, the US dollar. If the US dollar has direction, it's easier to make money. If it doesn't, it gets trickier because then we've got to sort of start to decipher what's happening in Europe, UK, Australia, New Zealand, Canada, Japan, Switzerland, etc. Right? You look at the major currency pairs here, and we're looking for opportunities to get in with the trend where the movement, the dollar has been trending lower across most pairs. Once again, oil at $63. We got stronger US numbers, weaker CAD. Of course, the dollar CAD sort of kicks up, but I tell you what, you got to think it's going to come back with if oil continues to rally. This is a really confusing one for dollar CAD. Now, Euro has been going up, Sterling sideways, Aussie and Kiwi up as well. But if you looked at the price action here over the last 12, 16, 24 hours, it's been pretty much largely sideways. Dollar yen's probably the odd one out, as is the dollar CAD with the US and the Canadian numbers. So what do I think from here? I think everything's in the balance. We are building up for a potential move. Hopefully it comes on the US dollar side of things because then it's easy to pick off the major currency pairs. If it's a Euro, Sterling, or UK, Australian or New Zealand or Canadian release, well, let's just concentrate on the four bottom ones down here. Okay, if it's one of these countries' data that gives us a bit of a momentum on the pairs, well, then we may have an opportunity. What you can end up with is like dollar CAD, where you're getting mixed data across both pairs. You're starting to get a pretty wild price action on that as well. So what do I think from here? Well, we are just in the balance. And this is what you've got to understand. You can't just rush in every day and start banging away. If I just blow these currencies up to where they currently are, right, we'll get a better idea of what's happening on the current price. And let's get the Kiwi up here as well. That should adjust itself and it hasn't done so. Right. Okay, so what we're looking at is basically, I mean, this is a bit of an exaggeration of the price action, but you can sort of see exactly what I'm talking about. The price hasn't exactly come back into play. Okay, and if you're looking over the last, as I said, the last day or so, if I just blow that up a bit further, you'll get an idea of the Kiwi. What we're seeing is stalling prices, right? There's no real clear trend lines. So when it comes down into Friday's trading, coming into the Asian session, mixed feelings with regards where these currencies are going. The trend has currently stalled and we're waiting for the next directional force, right? So you're coming back into Friday's trading. You're really coming back into looking for short-term trading opportunities. If you are, don't forget, we still have the weekends. There's still plenty going on. The major currency pairs at the moment, discombobulated, right? The clocks have changed over. There's no real direction here on the majors at this point. Of course, one of the key things you can be doing is keeping a close eye on the US equity futures to give us an idea of where they're going, right? And obviously keep an eye on the treasury prices, but you're looking for short-term trading opportunities, if anything, right? So when you come back to most of the pairs here, I mean, as strange as it is, the one pair that sort of has a little bit of structure is dollar CAD, particularly with oil at $63. Let me just change the color of that pen. So of course we've seen dollar CAD correct. The market was short. We get strong US retail sales. We get weak Canadian manufacturing sales, leads to a stronger dollar CAD. Is this a short-term thing or not? I would probably think so. You can see how this thing's bounced back to that previous support trend line. Now, you'd expect with oil rallying, if it continues to rally, well, this thing should just roll back over. If oil falls, well, then you're looking for a topside move. The benefit of dollar CAD is, particularly in the North American session, it has oil as this major indicator that tells us where it's potentially going to go. And that's why dollar CAD stands out a bit. The rest of the pairs, well, you know what? Unless we get some strong US numbers, it's pretty hard to even find a short-term trading opportunity, right? So just having a quick look at the VIX, like the volatility index, right? No one is expecting anything crazy to happen, right? So don't get all excited that there's a massive move coming. If it does come, it's going to be completely out of the blue and you won't be able to pick it anyway. So and don't forget, this is building us up for, if it's not trading this week, for potential moves next week. We've got strong US retail sales figures. This is going to start bringing the Fed discussion back into play. Now, they've already told us they're not going to do anything for a couple of years, but you know what? That can change very quickly. If we start to get consistent US numbers where, you know, the prior number's -3 and they get a figure close to 10%, I tell you what, if they get another month of that or 2 months, they've got to start changing their rhetoric, because they're going to start to say, well, you know what? We thought this was going to take 2 years. It's actually taken 2 months. So anyway, we'll see how that plays out. We are starting to see, though, the good part is the macros are in play, offsetting the treasuries. I'll tell you what, you get strong numbers, US numbers, and a higher yield on the treasuries, the dollar's going to rally very aggressively. That's something to keep an eye on as we go forward. Right now, I can't pinpoint where the trade is going to be over the next 24 hours, but keep an eye on the treasuries, keep an eye on the data, and there's not a lot of macro data coming out. You got some Chinese figures here coming out, some final inflation numbers out of the Eurozone, and some housing starts out of Canada and the US. University of Michigan prelim sentiment numbers there as well. Probably worth having a look at if you're looking for a die-hard last-minute trade for the week. All right, guys, it's one of those strange ones. If you don't see anything good, the best thing to do is be patient and wait for the best opportunity. And that's the way all the pros go about it. All right, guys, have a good one. Cheerio.